Most people are not ready for this ticking time bomb. Inflation is now as sure as death and taxes, and neither of those are very much fun, are they? Yet we still fail to see the bigger picture. How is this going to affect us? How is this going to affect the generations to come? There is no way we'll be seeing, gasoline go down to $1 a gallon, or pay $1.50 for a dozen of eggs, or a nickel for a bottle of soda pop anymore. Those times are long, long gone. It's up for granddaddies to tell their grandkids. What we don't know is this: the government actually needs inflation to survive. Before you say, come on, Lark, put down the bong, man, stop going down the conspiracy theory rabbit holes, just hear me out, because this is pretty interesting. It's going to become clear by the end of this video. And as a bonus, I'll let you know some ideas on how you can prepare for currency debasement, runaway inflation, all that kind of craziness. So let's look at how much the U.S. debt is. At the time of recording, it's nearly $35 trillion, an unpayable, insane amount. Totally wild considering that the U.S. annual GDP is around $25 trillion. You know what's even crazier still? It's increasing by $1 trillion every 100 days. $1 trillion is bigger than the GDPs of countries like the Netherlands, Turkey, Switzerland. It's crazy. So how is the U.S. debt connected to inflation? Well, it's connected quite a bit, actually. Before we answer that question, we have to understand inflation itself. Now, in very simple terms, it is the rise of the cost of services and goods, what most of us would describe as, why the hell is it more expensive to fill up my car, my grocery cart? Why is everything more expensive than it was a year ago? Well, this happens due to a variety of reasons. One, of course, is due to the law of supply and demand, wherein the high demand pumps the price of a product up. But for most parts, it is because of the government's monetary policies. They flood money into the system. The banks and them, they get to front run all of that inflation that comes. So we all get it. Inflation kills our purchasing power. But the truth is, it kind of helps the government out quite a bit. They can help balance out their debt a little bit. Let's go back to that $35 trillion debt. You see, paying this is almost impossible. It's never going to happen. It's when you understand that, you realize the whole thing's a damn house of cards, but that's a different story. We can compare the government to a consumer with credit card problems. There was not enough money in the first place. So instead of, cutting expenses, the government decided to just keep racking up more debts, except in this situation, they're the credit card company. And they just keep upping their own limits all the time, and no one stops them. Now the debt is so big that the annual interest alone costs $1 trillion a year, and that's ahead of military spending. You know how much America loves their military spending. That's insanity. Fortunately for the government, but unfortunately for everyone else, inflation becomes a solution for this problem in a weird way. You see, think of debt as any asset that loses value over time, just like that money you've been keeping in the bank, which is, of course, a losing proposition. Remember, like Michael Saylor said, there's a name for people who store their wealth in fiat. We call them poor. Now, for example, let's say I want to borrow $500,000 to buy a house. The current fixed 30-year mortgage rate is about 7%, so that's about $3,300 in monthly payments in principal and an interest for the next 3 decades. There's a reason why they call it mortgage, because it's until you die. Anyway, it's a big number. However, in high inflation environments, everything ends up going up. The prices of those assets go up. Now, in the next decade or next few decades, that $500,000 house that you bought, maybe it turns into $1 million house. Maybe a $2 million house you bought in the right neighborhood, and your income is probably going to go up too. So you're not going to be making $10 an hour. You're going to be making 20 or 30 bucks an hour. But since you have a fixed mortgage, you still pay the same amount each month. With a bigger income, it becomes easier then to service your loan. Now, in the same way, the government is actually out here banking that its revenue will increase in the future and that it will be easier for it to pay down its debts. So if for some magical reason inflation were to stop in its tracks and the prices of everything were to go down, the USA would actually, in a weird way, have a harder time paying off its debts. In a deflationary environment, the government income from taxes probably would also decrease, unless, of course, they raise taxes and all that stuff. That's a, again, different metric here. But like the tooth fairy, the idea that the government will allow some wild deflationary environment to happen, probably not the most likely scenario, right? Tooth fairy's probably a space alien anyway. Look, debasing the US dollar is their way of making sure that the debt, well, is manageable, let's say. You see, the US defaulting on its debt will open a whole other can of worms. They don't really want that to happen. At some point, they may not be able to avoid it, but that's kicking the can down the road for another day. If it were to happen, financial market volatility would be an understatement. Investor confidence in the U.S. system itself would be eroded, leading to a sell for treasury bonds, all kinds of knock-on effects. Lost consumer and investor confidence will also result in reduced spending, reduced investing. That, of course, ends up leading to economic catastrophe, basically, which would result in not just a recession, but probably something much worse. This could also, of course, lead to a disruption of government services, which, of course, include all the things that people rely on, like Social Security and Medicare. You cannot trust the government to take care of you in the old age. Okay, keep that in mind. If you rely on that, you're going to die out back to Walmart from your greeter job, and the robot that replaced you will find your dead body. The almighty US dollar can also lose its reserve status here as the global reserve currency if this were to happen. Remember, the greenback is not backed by anything but except the full faith and credit of the US government, aka trust me bro model, which is bad. Which means if the country fails to pay its debt, there's nothing backing it up. Now, before we get into what all this means, let me interrupt the flow real quick to let you know about the best damn newsletter in the cryptocurrency business. It's my newsletter. It's called the Wealth Mastery Newsletter Report. Every single week, we're bringing you the latest and the best insights in the market, meme coins, airdrops, altcoin news, deep dives, NFTs, technical analysis, and much, much more. You can join 125,000 plus weekly readers who love it. I'm sure you will as well. You can do that for free using the link in the description, pin comment, and X. Thank you very much. We can bet that inflation is here to stay. It's probably not going anywhere anytime soon. And yeah, I know they can try to control it, but it's still not going to go away anytime soon. Even the best case scenario, they want 2% a year, which is still adds up pretty fast. Look, they need to borrow more every single year to try to plug those budget deficit holes. The fiscal year 2023, the government collected $4.44 trillion in revenue. However, it spent $6.13 trillion. So that means there was a $1.7 trillion deficit. But of course, salaries, contracts, Social Security, blah, 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 blah. All that stuff still needs to be paid. So what does the government do? Well, they resort to borrowing. They resort to money printing. Money printing floods the system with more money, creating more inflation. You see where we're going. Since the 2001, the federal government has run a deficit every single year. It peaked in 2020 at 3.3 trillion. It was followed by 2.77 trillion in 2021. Yeah, that was all due to COVID-related spending, so I get it. But since 2016, increases in spending on Social Security, healthcare, and interest on federal debt, which is getting really, really bad with the high inflation, the high interest rates right now, they have all outpaced the growth of revenue. And the interest on the debt, oh boy, well, America's in trouble with that one. Now, look, with all these numbers, it does not take a genius to realize that the U.S. government needs to do something drastic, or the whole house of cards comes tumbling down, because the emperor isn't wearing any clothes, but they can keep the illusion going for a bit longer if they keep moving things just right. Now, the government will continue to accumulate debt, and to service this debt, the inflation will be maintained at an acceptable level. For the Fed, the acceptable level is 2%, but who knows if they will rather maintain it at a higher level to make debt repayment easier, expecting, of course, those in power to then spend taxpayers' money responsibly. Obviously, that's just wishful thinking. That's not what they do. That's not how they operate. It's projected that the U.S. debt will balloon to more than $54 trillion in the next 10 years. What? Imagine the interest payments on that. $2 trillion a year, $3 trillion a year. So it seems like the government will keep having these wild budget deficits. And I don't want to add to your worries, but aside from this, Social Security expected to be insolvent by 2033 or 2035 at the latest. Again, no one's coming to help you. The government's not going to help you. All they're doing is stealing from you. Now, according to Jason Fitchner, chief economist over at Bipartisan Policy Center, Social Security's unfunded liability is around $22 trillion. And if we want to make the fund solvent for the next 75 years, an upfront sum of $22 trillion is needed today. That's obviously incredibly worrying, because in 2023 alone, 66 million people collected Social Security benefits. And with people living longer and longer, well, I guess life expectancy in the USA is going down. I guess bonus for the Social Security system, bad for regular humans. Can you imagine how many more people are going to be relying on this in 10 years, though? It's going to be a lot. So expect the government to continue embracing the inflation and the debt cycles. The future kind of feels a bit bleak when you look at all that, doesn't it? However, there is still hope, of course, that the future leaders of the country will think of something better to do than whatever has been being done to prevent catastrophe, but don't go holding your breath. That's why you have to save yourself. It's prudent to prepare for the worst, because it's probably going to happen. Again, governments don't know what they're doing, or they do, and it's even scarier because it's scary when you realize what's happening. You have to protect yourself. You have to protect your family. Personally speaking, Bitcoin, obviously, it's one of our best bets since its creation in 2009. It's outrun inflation and other traditional asset classes by a massive margin. It's projected to surpass the $1 million mark within a decade. I believe that can happen. If the dollar loses global reserve status, gonna feel good to hold Bitcoin in that situation, won't it? Holy crap. Not saying Bitcoin is going to become the global standard, but man, imagine not holding Bitcoin when that happens. And of course, since Bitcoin has a wildly low inflation rate, a set number of coins, and it cannot be weaponized by any nation, it's a very powerful tool. And why do you think that countries and sovereign wealth funds and all that stuff are exploring adding Bitcoin to their portfolio? Because they know. They understand. And of course, buying gold's another option. I know old boomer metals, gold. Yeah, cool stuff, right? But hey, countries like China, Turkey, Singapore, they're ramping up their gold reserves big time because everybody knows they can't trust the US Fed anymore because they're inflating the money away like crazy. However, remember, it is not as easily stored and transported as Bitcoin. It's the superior asset class when it comes down to it. The U.S. government also has a history of confiscating gold. Will they do it again? Probably not. But hey, don't put anything past them. Remember, in 1933, Roosevelt signed an executive order ordering citizens to surrender their gold to the government or risk fines and imprisonment. That's what you're dealing with. The government's here to protect you guys. Come on. So what would stop the Fed from trying to do it again? Or even scarier, confiscating Bitcoin ETFs. You got your own Bitcoin in your own custody, right? If you have the capacity to do so, consider it. And you can also consider stuff like getting second residencies, acquiring second citizenships. If you have grandparents from like Ireland or the UK or something, maybe you can get a passport. Italy, Spain, same stuff. You can also do it via investment. Not even that expensive. I know $150,000, $200,000, a lot of money for a lot of people. But hey, if you make it big in crypto, it might be worthwhile investment to get a Caribbean passport. Then at least you're not trapped in a sinking ship. You have options. You can buy properties in other countries. It can also be a good plan B. Again, if you make it in crypto, this could be a good way to spend your money to protect yourself. Look, I hope that inflation and the debt time bomb and all this stuff don't get totally crazy. The US right now is the biggest economy in the world. Any disaster that will fall on it will have far-reaching effects. And we could see hyperinflation happen unless this debt problem comes under control. Obviously, we don't want that. But make sure you have your plan B in place because one thing is for certain. You cannot trust your government to do almost anything, certainly not to protect your financial well-being. Thanks for watching.